Okay, so good morning, class. So our topic for today is the week 3 in your LMS, which is the estate tax. So we're going to discuss here about the computation of the estate tax as the transfer property from the decedent to the beneficiary. And we're going to discuss here about the comparison of the computation of the estate tax based on the normal tax on the estate under the RA 8424 and the RA 10963, which is the train law, about the simplification of the estate tax rates. Our learning objectives here is to define what is the estate tax, to explain the estate tax rates, to cite an illustration on how to compute for the estate tax payable on the old rate versus the train law, and to explain how to file for the estate tax return. So what is the estate tax? The estate tax, it is the tax on the right of the deceased person to transmit his estate or the transfer of his or her property to his uh, to his beneficiary or lawful heirs at the time of the death, and even the certain transfers equivalent to testamentary disposition. But according to the Bureau of Internal Revenue, estate tax is not just a tax on property, but it is also a tax that which imposed on the privilege of transmitting property upon the death of the owner. Please take note that the estate tax must be filed, or it emphasized that if we file for the estate tax return, it must be filed within 6 months from the decedent's death. And the deadline of the filing of the estate tax return may be extended by the Commissioner of the BIR in meritorious cases which is not exceeding 30 days. And it must be noted that the estate itself is must assign its own tax identification number or TIN. Then the estate tax return is filed, it should be filed with the Revenue District Office, having jurisdiction over the place of residence of the decedent at the time of his death. But please take note, if the decedent has no legal residence in the Philippines, he can still file on the BIR head office located in South Quezon City under the Revenue District Office number 39, or they can file on the Philippine Embassy or Consulate if the decedent is in the when the decedent is residing in other country at the time of his death. Furthermore, the estate tax shall be paid at the time the return is filed. So it means when you file for the estate tax return, then it must be filed also. It shall be paid upon the payment, upon the filing. However, upon the request, and if the Commissioner of the BIR finds that the payment on the due date of the estate tax or any part thereof would impose undue hardship upon the estate of any of the heirs, it may be extended at the time of the payment of such tax or any part thereof not to exceed of 5 years, in case that the estate is settled through the courts, or 2 years in case the estate is settled extrajudicially. The extension of the payment of the estate tax is granted by the BIR Commissioner, but it requires a bond that the amount is not exceeding double the amount of tax, okay, as it deemed necessary, because it is very hard, or it may be a burden to pay for the estate tax about the transfer of the property from the decedent to the lawful or legal heir or beneficiaries. That's why, in case that it is incapable to pay for the estate tax, it shall be extended, okay, for the 5 years in the form of a bond. So it can be paid on the staggered basis upon the transfer of the property. So this is the estate tax rates rather under the RA 8424. So this is the normal tax on the estate from 5% up to 20% based on the net estate. So we have to compute for the net estate So computation is to identify the gross estates followed by the allowable deductions in order to compute for the net estate. So we can compute the normal tax on the estate based on the bracket under the RA 8424. And as I've said, the basis is the net estate. It means if there are allowable deductions from the estate, the deductions are, of course, we have the ordinary special deductions that not more than 1 million. That's a standard deduction for the special deductions on the family home and the funeral. That's why to compute for the estate tax, it is better to consult an accountant in order to determine the accurate estate tax, because the accountant or the certified public accountant must do to consolidate the gross estate and allowable deductions so they can compute the accurate net estate that is subject to compute for the estate tax. Okay, so let's have the following illustration. Mr. Juan Todas, a Filipino decedent who died due to severe asthma, left the following properties and obligations to his surviving spouse sa ligaya. So what are those properties left by Juan Todas? The house and lot family home, 2.5. The farmland acquired by Juan before marriage, that's 3.5 million. The cash in bank, excluding the 12% accrued interest for 10 months, that's 2 million. Jewelries brought into a marriage by Saligaya, 800,000. The car of 600,000. The land inherited by Juan during the marriage within 3 years, it's 800,000. The amount is 1 million. The money inherited by Saligaya during marriage, that's 500,000. So what are those expenses claimed on Juan Todas? The funeral expenses, of course, 300,000. The judicial expenses, 400,000. The mortgage loan, land inherited, assume it's 300,000, but it's 100,000. Medical expenses already paid within 1 year, 700,000. Unpaid income tax after death, 50,000. Exclusive donation to the Philippine government, 300,000. So the requirement is to compute for the net taxable estate and estate tax payable. So here are the solutions. First, we have to compute for the gross estate. So let us classify the exclusive and conjugal properties of Juan Todas. So the house and lot, it is a conjugal, it's 2.5 million. The farmland is also the conjugal, it's 3.5. The cash in bank is also within the marriage, it's 2 million, it's conjugal. And the accrued interest payable, okay, on the cash in bank, that's 200,000. The jewelries is also conjugal, 800,000. But the land inherited to the parents of Juan Todas, that can be 1 million, that can be an exclusive property. So the total gross estate is 10 million. And we should less the ordinary deduction and special deductions. So what are those ordinary deductions? The funeral expenses, but it's only limited to 200,000. The judicial expense, 400,000. The mortgage loan on the land, 100,000. The transfer for public use, 300,000. Vanishing deduction, 120,000. So the total ordinary deduction is what do you call this? It's 1,120,000, and the net estate before the special deductions is 8,880,000. And then let's deduct the special deductions. That's the exclusive, the standard deduction, the family home, and the medical expenses. So that's 2.5. So the net estate before the share of the spouse is 6,380,000. And we also to deduct as part of deduction the share to surviving spouse, which is the 50% of 8.4, which is the conjugal property, the total net estate. So that's 4.2 million. So the net taxable estate is 2,180,000. So the net estate is the tax basis to compute for the estate tax. Okay, so if we apply the RA 9484 when it comes to the basic tax on the estate, so that is that's the 11% on the excess, and with the initial tax of 135,000 pesos. So the tax on excess, of course, 180, in excess of 2 million, so 180,000, 1 million rather, 180,000 times 11%, that's 19,800. So the estate tax payable is 154,800. But under the train law, of course, under the train law, the RA 10963, from 5 to 20% of the basic tax on the estate tax, it was simplified only to 6% of the net estate. So the computation of the net estate is the same, but the tax rate is only 6%. That's why one of this deduction, okay, and part of the standard deduction, okay, the standard deduction on the family home and the medical expenses, from 1 million, it will be increased to 5 million as the deduction from the gross estate. So let's have the solution of the net estate based on the RA 10963. So it's the same data and the same computation, okay? But the difference is the special deduction, which the standard deduction of 5 million. Okay, that's why the total deduction, the special deduction is 6.5. That's why the net estate before the share of spouse from the RA 10963 is 2,380,000, and less the share of surviving spouse, which is at 50%. So the net taxable estate is negative 1,820,000. So if we compute for that, that is to 6%, that is negative 109,200. So therefore, it's negative. So there will be no tax to be paid. That is exempted, but we have to file for the estate tax return as an exemption. Okay, so of course, this is what I've said. If the gross estate is less than the amount, there will be no estate tax to be paid, but you still have to file for the estate tax return as an exemption. So what is the how to file for the estate tax return? So the BIR for the tax form that we need for the estate tax return is the BIR form 1801. So what are the basic documentary requirements for the filing of estate tax return? So we need a certified true copy of the death certificate of the decedent, 1 original copy and 2 photocopies, the TIN number of the decedent and the heir. Okay, the decedent and even the heir, 1 original copy for presentation only, and any of the following, 1 original copy and 2 photocopies of the affidavit of self-adjudication, the deed of extrajudicial settlement of the estate, if the estate had been settled extrajudicially, court order if it is settled judicially, and the sworn declaration of all properties of the estate, including the last will and testament. Okay, so that will be the documents to file for the estate tax return. And that is our topic for today when it comes to the estate tax or in the computation of the estate tax.